TTM Trades, welcome back. I just want to talk about what happened on Friday. Okay, now it didn't catch me off guard that we reversed, that we bounced off a key support level. That didn't catch me off guard at all. But what did catch me off guard was the way we went into the closing, which was just a power surge in volume, and it looked like it squeezed a lot of shorts at the same time, and you get this long candle wick. I mean, from 390 all the way up to 396. Dang near a 6 point move in one day, and that's not very typical on the SPY. Okay, um, literally in 2 days we recovered all the gains over the past 4 to 5 days, if not 6. So what does that say? Okay. Macro perspective down, I've been saying for the longest, this top one standard deviation Bollinger Band is holding very well. And it is a strong line of support on the weekly chart on a week-to-week basis. So as you can see, every time you pull back into this area, 1, 2, 3, 4, 5, 6, 7, and including last week, 8, every time we hit right in this area, some buying comes into play, and then we rally off of that line of support. Okay, so that's the weekly chart. Sliding the daily chart over into the 2-hour chart. That top one standard deviation has been correlating with the bottom one standard deviation on the daily chart. Hence, every time we pull back in that area, right, we get a bounce. Now, just looking at this, right, on the daily chart, the PMO is still curved downwards and is below both its averages. Okay, even though we had a strong 2-day rally, it still wasn't enough momentum to pull the PMO to the upside. All right, typically when we see reverse off a key support level, we like to see some intraday consistency as far as buying. As you can see here, when we got down in this area, it's about 2 days of consistent buying down in this area, and then you get a nice solid breakout, to the upside. Again, let's look at some other key times we pull back into key support levels. We pull back into the middle BB, a couple of days of nice consolidation, then you get a nice run to the upside again here, a couple of days, middle BB, then a continuance run to the upside. When you get these 2-3 day strong rallies like this, it looks like an exhaustion move. All right, and I'm gonna show you in detail what I mean by an exhaustion move. Okay, now what exhaustion means, when you exhaust a move, okay, normally when there's a strong sell-off to the downside, right, it typically gets to a point where it's called capitulation, right, where everyone's selling, and then it gets to a point, as you can see, the volume starts to spike, where everybody who wants to sell and gets out hurry ups and panics and gets out and sell their shares. And now all the sellers are exhausted, and it leaves the only players that are left in the game are the buyers. And then they come in and they usually can run it back up to the upside, because that downside move has become so painful that everyone who's wanted to sell has sold their shares and gotten out. All right. That's what we call a capitulation move. Pretty much, that they quit, they get out. All right. And then normally to the upside, we call these exhaustion moves. And you really can't see it on the daily chart. On the daily chart, it just looks like a typical 2-day bounce to the upside. But it was a weird 2-day bounce. It wasn't some consolidation at a key support level where buyers and sellers come to some type of equilibrium, and then a nice rally coming off that support level. All right. Normally you have a consolidation period, so that way you could do some base building and form a nice solid foundation for the price action to hold. But this was immediately hit and then take off. So 385, we've been talking about this key support level for quite some time. So bring the 2 hours to the right, 30-minute to the left. Now, again, we played this one to the downside, starting here right around 394 to 395, and we just took this 2-hour chart signal of momentum to the downside with the consolidation. And my last video, I said we should see a strong spike in volatility, either to the downside, just based on momentum trickling down, and then a consolidation period where the bands were tightening. Now, instead of having that strong move consistently to the downside where the bands were wide, and then you'll get this Bollinger Band with spiking up, the price action immediately rallied back into the bands, which caused the volatility spike that we were expecting to subside. And you see the Bollinger Band with pointing back downwards now. Okay. And the PMO is still pointing downwards and it hasn't fully crossed over. All right. It's kind of like with these last rallies we've seen here, where you get these strong rallies back to the upside, and there's not enough momentum to bring the PMO to a cross. Again, strong rally to the upside, not enough momentum to bring the PMO to a cross. Kind of got close here, and then the momentum continues to the downside. So same thing here, strong rally to the upside, not enough momentum yet to bring the PMO to a full cross. All right, so still pointing downwards. All right. Now, again, back to this capitulation. What I want to show you all something. I'm gonna keep the 2-hour chart here and the 5-minute chart here. Now, again, when we're ranging, because Ticket Spy has been ranging in this price range of 395 to about 380 to 385 now since February, late January. I mean, we've been ranging in this area for quite some time. All right. So when we're ranging like this on a day-to-day basis, I take smaller time frame signals. All right. And more than less, I like to take the 5-minute signals whenever the price action is in a range. And just looking at the 5-minute chart again, what I was looking for was for us to hit that 385 on the weekly chart, and then see if we got a nice rally off of that based on the 5-minute chart intraday. So what I was looking for was one, we was already holding puts. Price action was trending down, 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 down. When the price action hit here that morning, when it gapped down to this 385 level, I closed out my puts. And then when I started to see the price action rally, okay, I immediately bought calls. Now, I violated my own rules because, one, we didn't break above that bottom one standard deviation, which lets me know that the price action has come out of a downtrend. Two, the RSI didn't fully cross over. And then three, the price action was still very volatile, meaning that move to the downside was still moving at a fast rate. Okay, that movement to the downside hasn't subsided. So I normally look for my Bollinger Band width to get back below its average to let me know that downside move is slowing down. So again, I bought calls right here in this area, violated my rules, and then the price action hit that bottom one standard deviation and continued downwards. Now I didn't panic because I knew that 384 to 385 is what I kept preaching. Okay, so when we got down to 384, I said if we go past 384 on strong volume, then I'm gonna close out my calls. Okay, so what I did is I went and I set an alert, pretty much saying, hey, let me know when the Bollinger Band width is below its average, because once it gets below its average, I know the price action is consolidating at a specific price point, and that movement to the downside is slowed down. So started playing a game. I got the alert, boom, that the price action was consolidating, and that volatile move to the downside is slowing down. So once I got the alert, I want to check out the chart. I see that we had got above that bottom one standard deviation. Let me know the price action has come out of that downtrend temporarily. That a volatile move to the downside subsided. I started seeing the PMO flatten out and crossover, and the RSI was above its averages. So all my key indicators lining up, telling me that the price action is bottom. Okay. And then we get this strong rally to the upside, and I'm constantly following the PMO, making sure we're good. Once I seen we dip like this and the averages crossed over, I went ahead and closed out my calls. And I thought we were done trading for the day, right? Stay cash. I figured, price action would consolidate in this area. And then on Monday, we would continue back to the downside. And then we get this strong rally from 391 up to 396 in the course of 1 hour, 30 minutes to 1 hour, which completely threw me off. All right. Now, I know I keep saying exhaustion. What I'm going to point out is a bunch of exhaustion and capitulation moves intraday that I want you all to look at. Because Monday it'll give a little more clarity on what direction we're going. All right. You see these high volume spikes intraday? These are called exhaustion and capitulation moves. All right. Typically, when it's to the downside, again, that means all the sellers who wanted to sell have panicked. The pain is too painful, and they sell. They just dump all the shares to get out. All right. Uh, Once the sellers have capitulated and quit, that leaves nothing but buyers to come in and reverse the price action. So we're just going to pay attention to the very high volume ones. So looking here, right, downtrend, downtrend on the intraday, boom, you get this high volume spike here, which gives you a fair idea that everybody who wanted to get out got out, and then you get this nice little rally. All right. Again, coming here, move to the downside, downside. Strong selling and buying volume at the bottom shows you that a lot of buyers are coming in. You get the reversal. Okay. Another high volume here, and the signal isn't always clear, but again, on this one, selling to the downside, you get this high spike in selling volume. All the sellers that want to sell sold and got out, and then the next day you get a gap up and a rally. All right, again, coming here, downside move, sellers capitulate. That's the high spike in volume right here. And you continue downwards for a little bit, but then, all the sellers that wanted to get out got out, and then you get the buyers coming in and the price action rallying to the upside. All right. And now you got this, and then we can even point out this one here. Again, move to the downside, high spike in volume, selling. Buyers immediately come in after all the sellers get out and take the price action back to the upside. All right. So what I'm looking at here is this looks like an exhausted move to the upside. All right. And what that means is intraday, it looks like everybody who wanted to buy in, as far as buyers, have all bought in at one time. All right. And what this typically does is when people all buy in at one time like this, and you get this strong intraday rally with a high spike in volume to the upside, that normally means that the buyers are exhausted. Meaning intraday, everyone who wanted to pile into this, piled into this. All right, whether that be shorts covering their shares, buyers coming in because they see this last minute rally and they all want to be a part of it. It just looks like everyone piled into this one move at one time. All right, which we call an exhaustion move. Now, when we say exhausted, that normally means that, again, so many buyers have piled into this move at one time that come Monday, there's no buyers left to come behind this and continue to buy and push it up, right? Um, it only leaves sellers to come in, short sellers, and people who are currently holding at this extended level to start dumping their shares and bring the price action back down to reasonable levels. Okay. But so many people have piled into this, just like on these volume spikes here. So many people have sold off their shares and wanting to get out of this downward move because it's so painful that now all the sellers are gone and exhausted, and it leaves nothing but buyers that come in and rally the price action. Okay. So again, to the upside, so many buyers have came in and piled into this one move at one time, to include possible short sellers, that it leaves no more buyers that come in at 395 to 396 and continue to rally this to the upside. So now at this extended level, which moves so fast, you have nothing but sellers that are left sitting here. And all it takes is for a short crack in this price move come Monday for this to fail, right? For intraday day traders to start taking profit. And every buyer that's sitting on the sideline looking at this move come Monday are like, I'm not chasing that because it's so overextended. If new buyers who are sitting on the sideline are saying, I'm not chasing this, And everyone that piled into this, all of this large spike in volume, all of these traders who piled into this one move, if no new traders come behind them and continue to push this up, everyone that piled into this move that were buyers are now going to turn into sellers, and they're going to hurry up and get out of their shares. And once they hurry up and cover their shares and sell to get out because they see nobody's coming behind them to push this up, you're going to get a large amount of selling, which will bring the price action downward. And once it starts coming downward, you get a wave of selling, and then you'll get a wave of short sellers piling onto it, and it's going to bring it back down to reasonable levels. Now, I'm not saying it's going to sell off and come back down to, these levels of 385 and 380, which we were talking about. But I do believe this will come back down to this 389 to 390 level. That's 150 SMA. And then if that doesn't hold, then we come back down to do a double bottom right around 384 to 385. But intraday, daily, you really can't see it. It just looks like a typical 2-day move. But intraday, this move has been exhausted. And all the buyers who piled into this, they're hoping that another wave of buyers will come behind them come Monday next week, and will continue to push this up. So that way they can either make a quick profit, or they can hold their shares for the long run back up to 400 or wherever people price targets is at. But once they see that new buyers aren't coming into this, it's going to cause a wave of selling, and this is going to come back down the key levels of 389 to 390 as we see here, and back down to 384 to 385. All right, TTM trades. I took enough of y'all time. I hope that made sense. I'm out.